AI has the potential to help, but it is not in the short term, not as critical as we might put it. Within energy, there is still a lot of opportunity for efficiency too. Whatever we can do there, we bring AI to that, and I think we're going to get to progress there.
AI startups raised $200 billion, and climate tech, in contrast, raised $40 billion.
In this space, there's a lot of what we call the bandwagon effect. You go in, I gotta go in, right? Your mission is what drives you. That needs to be there from the beginning. You don't want to compromise your mission, but you have to make money. If you're poor, you're just crazy. Tesla redefined the category of an electric vehicle. And with that came not just the look and the feel, but also the performance. That was a game changer because now all of a sudden I see an electric vehicle not as something that I need to have because environmentally is what needs to happen, but as something I want to have because I want to drive this car. And I think that was an important component.
Change of paradigm, right?
Yeah.
If we want to solve the climate problem, can we keep growing forever as we're doing today?
Don't quote me on this yet.
Hi everyone, this is Paul. I'm co-founder and co-CEO at IESE, and this is The Commerce Shift, a place where we bring together builders, thinkers, and change makers to learn and explore the future of commerce. And today we're going to talk about climate tech. And for that purpose, we've got here with me Desirée Pacheco. Hello, Desirée. How are you
Hi,
doing?
thank you for having me, Paul.
Thanks for coming. And well, Desirée, she's professor of entrepreneurship at IESE Business School, and she's specialized at the intersection of entrepreneurship and sustainability. She brings over 15 years of hands-on experience working with startups. Her research explores how ventures and corporations shape sustainable climate tech industries by influencing markets, policies, and innovation at scale. So a very interesting topic for today. So I'll start straight with one question, Desirée. Are sustainable or climate tech startups actually fundable by VC, or are we forcing them into a model that they don't really fit in?
This is a great question. So it's a good place to start, Paul. I mean, I think maybe when you ask this question, there are two questions that I would ask back, which is, what type of VC fund and what type of company, right? That a lot of the answer is it depends. This is what I typically tell my MBA students, right? Very often the answer is it depends, and in this case, that is the case as well. So when it comes to VC investing and funding, there are different mechanisms here, right? So maybe it's worth talking a bit about that. Obviously, we have traditional VC, which is, I think, is where your question is coming. There's also impact investing and other vehicles. Now, I think impact investing is sort of still defining itself, but generally looking at more, right, economic returns and positive benefits with intention, right? There's an intentionality there as well. And so that is a smaller space, right, relative to VC, right? And we've talked in the past as well about patient capital. And patient capital itself also, it's a very small space, even more than traditional impact investing. But there is a place for that type of investing. And there are going to be some ventures that are going to be better suited for that type of investing than for a traditional VC. Right? But a lot of it depends what type of venture. Right? And so if we're talking about venture, if this is a technology sort of platform software, yes, VC could be a good place, right? Because these are more scalable technologies that VCs tend to be more interested as they can grow faster. If it's not and it's more hardware, right, etc., probably there's a good chance that it's going to be harder in that case, right, to see that as a VC model. If it's more of a social benefit, maybe the pure market or economic profit isn't there. There are other sort of mechanisms, right, that could also come to play here, more patient capital in that case. So going back to your question, is we're talking about traditional VC, there are certain types of ventures where this would apply. And I would say these tend to be more the software type of venture that is more scalable and where growth can happen quicker as well.
So for those companies, that climate tech companies that change fundamentally what's behind the transition that we have to look for toward a more net zero economy, let's say, or those companies of building hardware or building infrastructure, so making the fundamental changes, it turns out that the classical VC doesn't fit in so well, right? So that exposes a problem, no? Because we need these companies for this transition. When we look at 15, 20 years time, and they don't have the capital to grow. So how do you see this?
So I do want to say that there are some of these traditional sort of infrastructure, let's change the paradigm, companies doing hardware, sort of, right? Where that have been funded by VC. So this does exist. But the question is, do we have it enough to truly make and move the needle? And this is where the problem lies, right? Because there's not enough VC in these types of, there's a gap in the investment for these companies. And this gap exists because it's hardware, and hardware is hard, like they say in Silicon Valley, and because of the other reasons of what we discussed, right? And so what happens then? If there's not enough VC here, who needs to come in, or who can come in and do some of this? What we're seeing is that there's some corporate venture capital that's coming into some of these investments because the corporates need this technology for the future and for their own survival. So they're seeing that more strategically as an investment. We see this, for example, in carbon capture models, where you see companies like Chevron Ventures behind some of these, right, direct air capture companies, and truly getting in because they want to have sort of, right, their leg on the game as well. And then we see the government as a necessary sort of a body to come in here as well. Philanthropic investments, a little bit less, right, than maybe in social issues, but we're starting to see a bit more of that as well in the climate space.
When you say we see, because I didn't mention at the beginning, you mean from IESE, from the research that you do? If you can explain a bit, what visibility do you have in the space? Because
yes, absolutely,
you might be an authorized person
yes.
to say this, but if you can
So yes, thank you. So I've been doing research, like you mentioned, in sustainability and entrepreneurship and innovation now for over 15 years. But we have a variety of projects. Many of them are how can entrepreneurship serve sort of as a mechanism for change, right? More broadly, and what does it take for entrepreneurs to be more successful? It's been some of the questions that we've been asking, and part of that is entrepreneurs often cannot do this alone in the space. They need that extra help, right? And so that's sort of the type of research that we do. But as part of that extra help is also that investment. And so more recently, and this is a working study, we don't have it published, but we've been looking at climate tech and venture capital in there, but specifically coming from corporates to understand first of all, are corporates investing in climate tech in a way that not only preserves their current models, but also pushes them to transform their models. So, for example, does a petroleum company invest in a solar energy company, right? Or, something similar or to that matter. And so, and the question is, and if they do in a way that is more transformative, do they stay committed for future rounds for these ventures? And that is one of sort of the question that we're asking. Why would they do it in some ways? Are they staying committed?
And what are the findings? Is there any conclusion you're ready to share?
Don't quote me on this yet. But what we're finding so far is that indeed they tend to stay more committed towards investments that preserve their current models. That's the reality. So, for example, going back to our carbon capture model, right? Carbon capture for an oil company would be a way to preserve their model.
Makes total sense.
And so we're seeing that there's more commitment in preserving current models. However, we also see that you can see an increase on commitment that is more transformational when these corporates are actually experiencing more competitive pressures. That is, their competitors are actually more likely to be also investing in climate. So they're feeling the pressure from the competition and they stay in the game for longer.
They have FOMO.
They have,
kind of.
Right. So that FOMO is helping them to stay on that trajectory of transformation.
Okay, good. And going back to the previous topic, just to close it, is there, for the climate tech space, is there an ideal mix of public funding, private venture capital and corporate venture capital? Is there a recipe or not really for an ecosystem to be mature enough? Or because I can imagine that there is a lot of public money in the space and a few corporate venture capitals, as you were mentioning, but there is lacking a lot of other more traditional venture capital. Is there an ideal figure we should go towards, or not really?
To be honest, I don't know a particular figure here.
Okay.
But what we do know for any innovation, is that when it's very early stage and it is not close to commercialization, this is where we need government and philanthropic investments.
Okay.
And in the traditional model, the VCs come later. Now, it is possible, as we're seeing with some of these investments, that corporate venture capital may come also a little earlier because these companies need that technology for their own future. So there's a strategic, not just financial motivation to do it.
Okay. So next question is, what are the rules of fundraising in this, let's say, climate tech space? For instance, I'm building a SaaS company, and in SaaS, like the metrics that you need to show are pretty standard, always the same. In the case of like climate tech companies that provide like deep transformation, right? We were talking about a few before, like Bound for Blue, putting fixed sails in ships and so on. That the ROI is going to be 10 or 15 years down the road. What are the metrics that investors are looking at in the early stage? So how do you make a decision to get into a early stage investment as an investor? What metrics do you look for?
I think it depends on the type of investor. But a venture capital firm is going to look at very similar metrics as they look in other investments, because you see less concession there. And so they're not necessarily sort of willing to give up, right, their return on investment, and they shouldn't, right? This is their investors are there for that economic gain, and so they don't sacrifice that. With impact investing, you do see, for example, like I mentioned, two types, but we are seeing more and more an expectation to also provide impact metrics.
Okay.
So impact metrics are becoming more important in impact investing. I would say, even 5 years ago, there was less of that. The field, especially, for example, here in Spain, it was not as developed. Now here in Spain, I'm hearing from many of these different organizations that they are asking more and more for those metrics. But the metrics themselves depend on the venture, because we're going to have some ventures that are more social in nature, others are more environmental in nature. And if you're tackling, for example, climate issues, yes, it's going to be about reduction of carbon equivalent emissions, but it might be that you're tackling other issues. So those metrics are very dependent on the mission. But now more than ever, those investors are going back to the mission. And those startups from the beginning need to sort of identify what their metrics are going to go, or what they're going to be for the future as well.
What's more, for me, what's more impressive of this is that, as you were mentioning, right, the metrics are going to be the same. But with these models, you cannot show the metrics. One thing you can do is to say, okay, I'm going to reduce CO2 in X, Y, Z amount. I'm going to change this KPI, but to do this, it might take 5 years.
That's right. So
a software company in that time might be down to Series E and have raised 250 million and already being above $1 billion run rate, right?
Right.
How do they compete against this reality?
So it's more expected emission, or in the case of emissions, expected emission reduction as opposed to actual in the beginning, right? And as the company progresses, then that could become more actual depending on sales, etc. So very much depends on the stage of the venture. And I think investors are, of course, very conscious of the fact that you cannot quite see those. But it's more in terms of the expectation, where the company is, where the business model is at, and where the technology is at a given point in terms of expectations.
So you might need to find investors with like accepting a lot of hypotheses, right? Because there's relationship between expectations and hypotheses, and valuations of the companies have different ratios than in traditional VC. Yes. Last year, 2025, AI startups raised $200 billion, and climate tech, in contrast, raised $40 billion, which is, I'd say, 20% of the total. So AI is having now even more than the half of VC money. do you think investors are chasing faster returns, or they are lacking patience with climate tech? So I guess this mix and this bubble with AI, it's there's really a lot of how fast the return is going to be. And this drop in venture capital, is it because traditional money doesn't have enough patience? Or why do we have this mix where it's only 20%? 20% is very, very low.
This is complete speculation. I don't know exactly where it's everybody's mind, right? But there's something we do know about venture capital in general. And is that in this space, there's a lot of what we call the bandwagon effect, right? You go in, I got to go in, right?
Okay.
I mean, there's a lot of rationality, but there's also, I'm not saying it's irrational because, this is what's growing, etc. But there's a lot of follow the money, right?
Absolutely.
And you talk about fear of missing out. That's exactly, a phenomenon that happens a lot in investing, especially in VC, right? So I think that is the primary driver.
Okay.
It's not that they're losing patience as much with climate as it is, hey, I have a fixed amount of money and I need to allocate it somewhere. And right now, the fastest growing opportunity and where I need to make sure I have a leg or two in is going to be AI. And so I think that is mostly what's driving what is happening. Unfortunate for climate tech. But I don't think it's necessarily a sort of a negative indication of climate as more as it is a positive indication of AI.
In this position where there is a bit more of a scarcity of resources, and you see for sure entrepreneurs and students at IESE all the day, do you think this scarcity in capital is killing ideas, or it's just making better ideas and more robust ideas? So how do entrepreneurs that have a clear mission of building something with an impact adapt to this scarcity of capital?
I think most likely is taking both effects. Right? It is, sadly, there are going to be some good ideas out there that don't get funded, and they win, and the winners are more incremental ideas. And so entrepreneurs are being forced in some ways now to maybe even work more on incremental ideas.
Okay.
And what are these incremental ideas, right? There might be more, okay, let's do a business model change, let's do this, right? In ways that maybe are more software driven. Because again, you always need to look at, when you're looking at the investment market, who's my competitor? And if a VC is looking at you versus an AI company, why would they choose you, right? And so they're going to want to choose you if you're a little, right, you're more scalable. And the reality is that you most likely end up in more sort of in the incremental space.
So that puts in a bit of pragmatism in the entrepreneurs, and they build things that make smaller incremental changes rather than changing the whole picture, right?
Yes, I think on average,
are we
right?
giving up then as a entrepreneur community? Are we giving up of solving fundamental problems?
We are never giving up. We are never giving up. But the reality is that we have to keep pushing and we have to keep getting better, right? Okay. And the reality is also that others may need to step in and take that greater risk. And we are seeing others stepping in, but on average, the average venture capital firm isn't there.
Okay. Yeah. Can climate and impact startups be profitable or strong or deliver strong results for the investors? Do we have examples of companies that really have provided very good multiples in EBITDA or even in returns to their shareholders?
So maybe I can start more broadly the sustainability category, and then we can move to climate. Yeah. We wouldn't be where we are if we didn't have these examples, right? Because there are so many reasons to say there are many win-win solutions out there. I have no doubt that we've seen many, right? There are many opportunities to do good for the environment or for society, and see that in your economic return. I think more broadly, companies like Patagonia, they're your typical sort of example, right? Your textbook example of this. But I think it's worth mentioning because there are many ways in which companies can actually add that premium, whether it's because they make better products, right? In the case of Patagonia, more higher quality, more durable, or whether it is because, is the cool effect, etc. Actually, many years ago, I wrote a paper about this. We call it the green marketing, because the idea was, you're going to have a market there if you add these additional benefits, right? And so we're seeing companies that have been able to add those additional benefits and be able to make money, right? Patagonia is one. So many. Tony's Chocolate Only, which is the company I mentioned to you. I have so many in my head. But in energy, we're seeing this, for example, the most basic example, which is just on LED lighting, right? Like you have an opportunity to save energy and, have something that is functional and it works well, right? And so every time you have these win-win opportunities, something great is going to happen, right? And we see it today, for example, in ability to like reduce waste, reduce money, right? Less efficiency in general, right? Has been a great category for huge win-wins.
And from the conceptualization part, what comes first? That's a chicken and egg problem. You before do good or you before win money? Or how do you, or even for a corporate, how do you strategize to build something which has an impact and is profitable at the same time? Do you have a playbook for this?
The chicken and egg issue, the classic. So, with this, I would say your mission is what drives you. That needs to be there from the beginning. Of course, you don't want to compromise your mission. But you have to make money. Because if you don't, it's what Yvonne Chouinard from Patagonia would say, if you're poor, you're just crazy.
Yeah.
Right? If you don't make money, you're not able to truly show to the world that, hey, this model works. So, and that money is what's going to sustain your mission, right? So it is a chicken and an egg that sometimes is very hard to separate. But the mission needs to be there. You start, but you do need to make the money to feed the mission. And without that, you can't feed the mission either, right? So I think in the beginning of many of these startups, it's important to stay true to the mission, and very often more in terms of where you're headed in those next 3 years. But today, prioritize also your economic outcome, because without that, you're never going to get to the mission, right? If you go out of business, you will never fulfill your mission. And so there's a fine balance. There's no cookie cutter solution here.
I like it, but I agree. Like pragmatic approach, and eventually
you will get to the mission.
Money first, then this will bring mission behind.
You will get to the mission. Yes.
Perfect. So looking at examples where transformation of things, right, have had success. Electric vehicles, for instance. Now we're looking at 2026 estimate around 24 million electric vehicles sold globally, which is 12%, so more than 2 digits from 2025. And 15 or 20 years ago, there weren't any electric vehicles. What is the key for this global success? Because that's a good example for many other things we have to do, right? Like energy transformation, things you were mentioning before. In the case of electric vehicles, what has happened that they are everywhere now? What was the perfect storm, let's say?
So, the electric vehicle had many runs, right? I mean, this is not something that was just invented just 15 years ago and now we're here, right? It's been stopped before. But this time around, what has happened is that many different forces came along. But I do want to say that in terms of let me start with this and then we'll compare it with other needs that we need to change as well. So what happened with the electric vehicle and what did this go well? It's sort of a constellation of forces all coming together. I'm going to start with one and then I'll move to others. But this one, I think it's important, and whether we like, regardless of how we might feel about the company today, Tesla redefined the category of an electric vehicle. And with that came not just the look and the feel, but also the performance.
Okay.
And so I think that was very important. That was a game changer, because now all of a sudden I see an electric vehicle not as something that I need to have because environmentally is what needs to happen, but as something I want to have because I want to drive this car. And I think that was an important component.
Change of paradigm, right?
Yeah. We're redefining the category. You redefine a category. Okay, now I have consumer interest much more than when I only sell the environmental benefit. Now, but on top of that, of course, I need all the infrastructure, and I need the industry to back me on this, right? So that's why incentives need to come in play. The role of government is huge, and needed to come into all of this. And we're seeing it, here in Europe, we're still sort of working towards pushing some of this. Some of these requirements have sort of stepped down or come down a bit, but we're still moving in that direction. And that's very important to have that government support on these markets as well.
But I like this thinking about Tesla. So it turns out we have to thank Elon Musk for being sustainable friendly.
Yes, yes, we do.
No, but that's an important shift. Yeah, I mean, I'm just looking for similar examples where the desire of the consumer has gone towards something which is actually better for the climate.
Yes. I mean, I think in the end, and going back to this paper that we wrote on green marketing, that was back in 2014. But what we said there is there's a variety of benefits that any product should have over and above the environmental benefit.
Yeah.
Because the category of consumers that are going to buy a product just because it's green often is not more than 15%. People need incentives.
In fashion.
Yes, you see it in fashion. In fashion, these numbers go from 7% to 13%, right? Yeah. And so we know that the consumer will not necessarily pay more for that benefit. It's a small percentage of those who will. They do it because they like it. And that could be either because functional benefits exist. It lasts longer. It, gives me better heating. It performs better. It drives better, right? It could be also because of design and aesthetic looks. Just looks better. It's cool. This is beautiful, right? Or it could also be because it's more cost effective, etc. Especially like in B2B relationships, we tend to see that as well as a big driver. And when you don't have that, other incentives, like what you're doing with Elix, for example, this is a case where the incentive is going to go through because now as a consumer, I'm being incentivized to do this so I can get another product, right? So when the incentives are aligned, that's where we're going to see this working more and more. And going to your point in terms of categories, right? I think, we've seen it with energy efficiency. It's the same thing, right? We're moving into other products that are more energy efficient, not always because they are better for the environment, but because at the end, they cost me less.
Yeah.
Right?
Yeah.
And so this goes back to that same idea of, when I see the incentive, I will act more.
Great. And connecting to this then, in this space of climate tech, there are many stakeholders, right? So there are the corporations, there are the governments, there are the shoppers, there are the brands, there are the associations, NGOs. Who's moving the needle here? So who's or it depends really. How do we move forward?
Going back to my MBA answer,
okay.
Paul, it's always going to be it depends. Yes, so it depends. Yeah. But who's moving the needle here, right? It very much depends on the context. It depends on the industry and the innovation itself. But let me give you a concrete example of a study that I did. I did a few studies in the U.S. on renewable energy. And so, for example, in the wind power and solar power sector, who's moving the needle? In the very beginning, in these sectors, the environmental NGOs were very important in pushing the government to set up different subsidies and market incentives. In this case, also mandatory regulations that would mandate electric utilities to have certain percentage of their electric generation come from renewables. And that was a really big step in the U.S., at least, because, again, I come from that context. So this is a study that I did there in terms of pushing the needle towards greener technology. But then what was interesting is we started to see then more and more of the startups coming in, many solar energy companies, for example, coming in, installers, etc. And when you see that sort of community of solar companies or wind power companies, they also start to change the character of what the industry looks like because they together collectively work through trade associations. So we saw it in solar energy in the US through trade associations, but also working with the NGOs, push for more incentives, in this case, market incentives. Give me tax breaks, give me rebates, give me this. That eventually fed back into the industry. So who was pushing all of that? It was the entrepreneurs, the NGOs, and then the government, who actually, based on the pressure from those other groups and what they were observing, also acted to change everything.
Which is true. That might be totally different from another space, no? That's energy space. You didn't even mention the consumer.
No.
Who cares? I mean,
No.
I don't mind how the light arrives my
No.
home if it's wind or
No.
or nuclear power.
That's
On
right.
the other hand, in retail, I think it's opposite, right?
Mhm.
So if you don't get the shopper wanting to buy something like which is eco-friendly or whatever, there is no will going forward, right? So it really depends on the space.
It very much depends on the space, yes. And so, but again, in energy, I mean, of course, the consumer in the end needs to buy, but it was also forcing the electric utilities to take on, because it's a very different market, right?
Yeah.
In some states in the US, it's a monopoly, and so you can go straight to the utility and make these types of mandatory requirements. But there are other states that are more competitive, and in those, the consumer had more choices.
Okay.
And so you started to see renewable energy credits show up there because the consumers also wanted to pay for that. But again, that's a small percentage of the market.
Yeah,
it doesn't go over 15%.
Is energy the first market that we should make more efficient for being more sustainable? Or
I think that
disrupt?
energy is a very important market. It's the most, in my view, still. When we look at potential for climate specifically. For climate specifically, energy is still where the biggest chunk of potential is there. According to, for example, Project Drawdown, which is an organization that I always recommend everybody to sort of look at and to understand where the bigger sources and potential for climate solutions exist.
Okay, and yes. What is the top three then? It's energy.
So you have energy, agriculture, and land use.
Agriculture, yeah.
It would be second. Third is industrial uses. So that's a very broad category. But within that, refrigeration, like we had mentioned, is a big area. Transportation would be, I think, in their categorization is about the fourth one in terms of potential.
Perfect. So AI, I mean, we have to talk about AI, you know.
We have to talk about AI. We have to talk about AI.
AI is everywhere now. Do you think AI genuinely help or can help climate solutions in the future? How is that intersection between AI and climate tech?
Well, it's a very good question, right? And I think that AI has the potential to help, but it is not, in the short term, not as critical as we might put it. So I think AI is going to be very helpful, going back to, we talk about efficiency and optimization. Now, we just talk about energy being like a big chunk here. And within energy, there is still a lot of opportunity for efficiency too. So whatever we can do there, we bring AI to that. And I think we're going to get, at least, especially where we are right now, we're going to be able to truly get to progress there. We also are going to be able to use AI for optimization, for monitoring, especially environmental footprints and environmental performance more broadly. And we are going to be able to use AI when it comes to adapting to climate change as well. I think, in my view, these are some of the most important applications of AI and the environment. But we are going to need to continue. I mean, we talked about the infrastructural changes that we need are going to need still a lot of that hardware that the AI can help to optimize that, but it's not going to solve it fully.
And what about the side effects of AI, like the energy consumption? I was posting this morning a LinkedIn post that was showing how the energy curve estimation to 2035 is looking. The whole increase, or 80% of the increase, comes from AI computer centers. So AI might help for making better executions or optimization, but there is a massive side effect in increasing energy, right?
I mean, I am not an expert on this, so I can only sort of speak to what I have read on the topic. But we know for sure it is a concern, right? In terms of there's more energy consumption. There's no doubt about that. We need a lot more data centers to support all of these operations, right? I think that the amount of energy or the number of data centers that are coming from between now and the 2028 is going to significantly increase to the point where I think some would estimate by 2028, maybe a 2% increase, right, in emissions from this. So it's not little. On the other hand, AI is becoming more efficient, right? And the technology is progressing. The question is, right, when we know that the efficiency in terms of energy consumption per query is coming down, the question is the number of queries going to stay stable or is it going to grow, right?
Or it's going to grow
To me, that's the
exponentially.
big question. And so we don't know the answer, but the more we use it, most likely the greater the number of queries. So that efficiency
Unless
won't
Elon
get us
Musk-
that far.
Or unless Elon Musk puts data center in the space. He
In the
mentioned
moon.
this
Yes,
last Monday, right?
Just last week, yes.
Last week. And
So-
actually, SpaceX bought an AI company,
That's
isn't
right.
it?
That's right. Yes.
Do you know that? I
Yeah.
don't know the story. Do
Yes.
you know
No.
it?
Well, I just read about it this week, so I don't know that I want to comment. I'm no
But that's a
expert
nice
on
combination,
this, but
space and AI,
but
then you
that's been the
kick
idea
the
is to
problem off the
combine
world.
it and take it all that world. If there's something I want to take off this world, it's things that are energy consuming. So I'm not going. I don't think we should debate that one. Just take anything that contributes to carbon emissions outside of Earth. That's not a bad idea.
Good. So we are towards the end already. Now that we've touched a lot of topics, one important question that keeps, for me at least, coming up again and again is: can we keep growing forever? Or I guess the answer is no, or I don't know. At least you'll say it. But if we want to solve the climate problem, can we keep growing forever as we're doing today?
So this is a very important question, and thanks for asking it. I came to this world. I went into study environmental studies because I had that concern, and I saw it in economic growth in my country. And I'm from Puerto Rico, and I could see how the growth also came with the mountains looking very different than what they used to look like, right? Yeah. And so I've always been sort of a fan of Donella Meadows, and I don't know if you know the work of Donella Meadows, but she and others have written on, this is work from a few decades ago, on growth. And there's a book that's called The Limits to Growth. And in this book, they sort of post these hypotheses that, growth, first of all, there's nothing wrong with growth. And there's nothing wrong with GDP. The problem is that GDP growth, right, and that could be infinite, but it is bounded by the physical nature of our planet, and that is not infinite. Our resources are not infinite. So by definition, because our resources are not infinite, to the extent that the growth depends on those resources, the answer will always be no, we cannot grow infinitely, because we have a finite number of resources on the planet. And so the only way to get out of the climate crisis and growing is by growing the areas that don't depend, right, on those resources. And so and we know that we're not there. And so the short term is no, unless we drastically would have to figure a way to grow GDP without growing the consumption and the use of some of these resources. But we're very far from that. So,
but theoretically, there is an angle for this, or
maybe not in terms of absolute growth, maybe in terms of relative growth. But even then, there's a lot of question marks. We would have to be significantly better at the use of these resources. That I don't foresee that future right now.
Yeah.
Maybe in 50 years, somebody would say, now it's possible. But with the finite resource that we have and the dependence that we have on those resources today, we are so far from it, right? Even just on circularity, we are so far.
Yeah, absolutely.
I mean, well, you know it. This is what you do at IESE. We are so far that, it's hard to grow one side without growing the other one.
So interesting complexity we'll have in the next years to come then, because that's
interesting,
always on conflict, right?
Interesting complexities. But I think that more than ever, we do have great minds in these problems. And I do want to bring that up because there are amazing minds, and there are, some that also are putting also their cash and their money were with these issues. And this is something we didn't discuss, but I mentioned to you earlier today how, you have organizations, or in this case, companies like Breakthrough Energy Ventures, who have very impressive portfolios, putting the money where some of these needs are. And so my point with all of this is that there is hope. And so our children know so much more about these issues than I knew when I was their age, right? And I think that more and more we see more people working on this. And so we do have hope. The question is, are we going to get there at the right time when we need it? And I sure hope that we can figure that out.
Nice. So last one, you already mentioned one, but is there any book you recommend or you like for any of the topics that we've been talking today?
Oh,
Anything
my
that you would
goodness.
recommend for?
You caught me now, like going blank, because I have so many. I don't know where to start.
You mentioned one before. Which
the
one?
Limits to Growth.
Limits to
but
Growth.
That's a very old,
Okay.
old book, pretty much precisely on these topics. I off the top of my head, gosh, there's just so many. There's a book on impact investing, for example, by Ronald Cohen, that I think it's very good for those who want to get in that space as well. And for different areas, there's going to be, of course, different resources as well.
Nice. So thank you, Desirée. Had a lot of fun, and thanks for coming here.
Thank you, Paul. Thanks for having me.
Okay.
Take care.